Welcome back. You're watching Buy Now, Sell Now, and we are focusing on quarter earnings. And next up for the management, we have Stove Kraft, and the results are good and a good start for the year. The new FY revenues have gone up almost 41.3% at 480.5 crores. PAT has almost gone up by 63.5%. 17 crores is the number. Margins have seen an upside of 69 bips at 11.2%. We're also joined by Mr. Rajendra Gandhi, MD Stove Kraft, to talk more on the numbers and to get a cue for the rest of the quarters. Hi, good morning and welcome to the show. So a strong set of numbers delivered by you, but as we head into the festive season now with higher inventory and the demand cycle especially, what specific are you seeing in demand trends that gives you the confidence that this momentum will sustain further?
Yeah, good morning. Of course, as this year the festivities are spread across the various months. We have Onam in August, October, early October, we have Dasara kind of festivities and November. So it is well spread, so it is much easier to cater to the demand. We are seeing good demand and high traction both in the cookware segment and the cooking appliance segment. The demand continues. There was a huge spike in the induction cooktop category, but we are seeing good growth in the induction cooktop as well.
All right. Nupur here now. General trade, of course, has grown over about 56%. Its best performance in 3 years. Now, is this market share gain sustainable, and what are you doing differently in this channel?
We are expanding and growing both. All these years, in the last few years, we are driven by e-commerce growth, high e-commerce growth. We are offline channels, both our retail and general trade are seeing very good growth now. The growth to both these channels have come back again, the offline channels as well. So going forward, we believe all the channels will grow at similar pace. So there was a disproportionate growth in the e-commerce, and now it is at a mature stage. So we are seeing this offline growth as well now.
But talking about induction cooktops, they have emerged as the biggest growth drivers. Do you expect this category to remain the fastest growing over the next few years, or was Q1 an exceptional quarter due to LPG shortages?
Both. Definitely, there was a huge spike during the initial periods of the first quarter. But then the cooking category is also being now driven by electrical appliances. And so the induction cooktop will continue to grow. It will definitely stabilize at a much higher growth rate versus the last year's. May not be at the level that the spike was, but we see this going to be the largest growth category for the current year.
All right, Mr. Gandhi, now while induction cooktops and cookers are performing well, small appliances and gas cooktops remained weak. Now, what initiatives are underway to revive growth in these categories?
We, being a manufacturing company, have capabilities to manufacture all the kind of appliances that we sell. During the first quarter, we had to move some of our manufacturing facilities for the small appliances to induction cooktops and infrared cooktops. So definitely there was a supply side dip on the small appliances. The demand remains. So we would have seen lower growth in the small appliances, but now all that has stabilized. We have augmented our capacities for induction cooktop. The other small appliances capabilities have come back to normal, and we are seeing actually the small appliances continue to see higher growth versus other categories.
You've also expanded into 9 new cities and added 17 stores this quarter. What is your store expansion roadmap now for FY27, and what's the timeline for the stores to break even further?
We are seeing, for us, every store has to be profitable. If we don't see a trajectory to growth within the first trajectory to profitability within the first 6 months, then we relocate. We don't have any non-performing stores in the whole the list of stores that we have. And we continue to grow, and annually we have a target around the 100 number for a number of new additions to the existing number of retail stores. We continue to be there to be able to add about 100 stores annually.
All right. Now, you also seem to have gained market share consistently over the last few quarters. Which product categories still really do offer the biggest headroom for market share gains?
We continue to grow, and we are leaders in several categories by volume. We, being a value brand, we address the largest segment of the population in the country. By volume, we are leaders in several categories, or getting to leadership in any of the categories that we are operating in. So definitely, this is at the cost of acquiring market share. Even legacy leaders in the categories that we are far ahead of them absolutely on volume terms, or we are getting ahead of them in volume terms. So I can say we see ourselves at many of the categories to be leaders only.
Sure. Commodity prices have been volatile over the past year. Do you expect gross margins to improve further in H2, or is the easy part of margin recovery behind you now?
No, we are. This endeavor is continuous. We will definitely improve from where we are. We are confident of improving our margins by at least 1% year on year for the next 2-3 years. And so this is both with uh, uh, the leverage on our operational leverage setting in. Our margins will also improve because we had set up facilities in the last 2-3 years, and all these are now operational. With that, costs are now well capitalize over the whole revenue, so the margins will improve from here.
So you're positive on the margins. Now, can you share with us your plans for the China market, timeline for setting up of your subsidiary, and the rationale behind the foray into this particular market segment?
This is not to address the China market. This is absolutely to address our domestic market in India. We do not have this facility in India to make tri-ply raw material, and we thought that since we are getting into this category of products, both for pressure cooker and cookware, we wanted to streamline our supply side, and we saw this opportunity. And it is more the technology today is more easily available in China, and the ecosystem is strong there. So we decided to have this facility in China. This is the first by an Indian manufacturer to have a facility in China. Within the Chinese operation also, this is one of the among the largest facility that we are sitting in. We are at the fag end of all approvals, or rather, we have got all the approvals, regulatory approvals in place. Now the factory is being set up. We see that the factory getting into production, say by before the end of the third quarter, that is before end of December.
All right. Now, with a healthy balance sheet and improving profitability, are you evaluating acquisitions or new product categories to accelerate growth?
We will continue to add new products to the segment that we are. We continue to invest in capabilities which can augment our existing facility. We will always see whichever will add value to our business, we will want to do that. Of course, as we are growing faster, we will need to add more capacities. We were well capitalized for the growth with the normal growth, but we are seeing higher growth now. So we'll have to accelerate this now faster.
All right. I think with that, it's time up on the show. Thank you so much, Mr. Gandhi, for taking time out for this interaction today. Thank you.